Hey guys, welcome to my YouTube channel. So in this video, what I want to talk to you about is, can Tesla stock reach $2,500? I'm going to give you an analysis for this target. So currently, the stock is trading as $1,000, and let's look at the potential for this company to reach this share price. Now let me go into my slide. So let's start here. All right. So what is the current scenario? So the current scenario is the company has grown its revenue from 2015 of $4 billion to close to $24 billion in 2020, which is an increase of 6 times. Currently, they have a market share of more than 70%, which is huge. And then the sales of the Model 3 has exceeded 150,000 units. The total vehicles delivered in 2019 is more than $360,000. And currently, Tesla has a valuation of $186 billion with a share price of $1,000 per share. Net income is at a loss of 892K for 2019. Now, one of the most important thing when you look for a company is to see what are the advantages that this company has over its competitors. So let's look at some of their advantages or the competitive edge that this company has. So currently the most advanced electrical vehicle in terms of technology. So a few points there is longest range, 400 more than 400 miles. As you can see this chart here, this is from Tesla's annual report. If you compare something like a Hyundai electric car, which gives you 250 versus the Tesla Model 400, and all the Tesla models are leading. And then they do have the fastest acceleration, the best autopilot, wireless charging, and also competitive pricing. Next, as I said, is they have a market share of more than 70%, which is huge, and that is growing. Next is now the edge that this company has over its competitors is something called the gigafactories. So these are gigantic factories that are in Nevada, and they're building one in China, and they have a capacity to produce more than 500,000 vehicles a year. The next important point is they have a huge database of more than a million Tesla vehicles on road. So all this data, Tesla's policies logs all the data they could from their customer, which in turn is analyzed with software to improve services. So here's a statement from Tesla, which I feel like gives them an advantage. So we believe that a key factor in our success will be our autopilot and FSD technology that currently enable the driver assistant feature in our vehicle, and in which we are making significant strides through our proprietary FSD computer and remotely updatable artificial intelligence software. So, in summary, it is a tech company and a hardware company. So, Tesla is a software company as much as a hardware company. There's several new products that are coming out, Cybertruck, long haul trucks. Just to give you an example, there's more than 3 million pickup sold in USA. So they have a huge potential to grab this market share in terms of pickup trucks and long haul trucks. Then wide network of charging stations. No other car company has this network. And then one additional feature that complements their business is they have a huge solar and energy business. It had revenues of $1.5 billion in 2020. Tesla has a growing and complementary energy storage and solar energy business. And then this business should grow in the coming years as more renewable energy is adopted by customers. Now, the other important thing is, obviously, the world is going into more stricter emission standards. And in terms of emission, here you can see the chart. This is from their 2019 impact report. Model 3 produces the least amount of carbon dioxide compared to an average, which is a big advantage for stricter emission standards, and as people understand the importance of environment. Next is Tesla's batteries are designed to outlast cars. This is a huge competitive advantage. An example would be a 200,000-mile Camry will be scrapped, whereas based on the data from Tesla, they believe that the battery, 200,000-mile driven Tesla, will only be degraded by 15%. So this is another advantage that this company has over its competitors. Now let's come to the big question here: is the opportunity according to most estimates. So here is a summary of one of the estimate. The global electric market is set to reach $802 billion by 2027. I believe, as more and more people turn into electric cars, which are much superior, and also due to stricter emission standards, this is a possibility. So initial global market of 2025 is $567 billion, and in 2027 it is set to touch 802 billion. So now let's do some valuation here. Anybody can say something is better, but ultimately you need to put into numbers. So I'm expecting Tesla's market share to decline. Obviously new competitors are coming in, so I do expect their market share to decline to 30 to 35%. So if we do a 35% market share on the total market share of 567, you get a revenue of $170 billion. This is basically 6 times today's revenue of around, I think, $26 billion. Now, if we put an operating margin of 15% to this $170 billion, you get about $25.5 billion. And then continuing that, all companies do trade at a multiple. So let's say 18, which I believe is a conservative estimate, 18 times 25.5 should give you 459 billion in terms of market cap. The current market cap is around $186 billion or 1,000 per share. So if they are able to achieve that, that's about 2.5 times the current value, which puts it at 2,500. Please note, this is assuming that the electric car market exceeds $500 billion and that Tesla is able to maintain a good market share of more than 30%. This, I believe, is a good risk-reward scenario. Now, obviously, every investment comes with risk. So it's important to go over the risks so that you understand and then you make an informed decision. So one is competition. 2021 and beyond, Volkswagen is coming out with ID Cross, and then Ford Mustang Mach-3 and other manufacturers like BMW are coming out with a slew of cars. So that will put some pressure on Tesla, and then consumers do have choice. Then somebody can come out with a superior product than Tesla, which is unlikely accordingly. And some of the other points here are from Tesla's annual report, and I've been analyzing annual reports and investment presentations. So one is they are dependent on suppliers, the majority of which are single source suppliers, and the inability of these suppliers to deliver the necessary components or a product can put a problem. Next is Tesla has had delays in production, so experience in the past and may experience in the future delays in production. An example was the delay in producing Model X. Now, the other is the halo effect of Elon Musk. He's a great leader, but he has had SEC-related issues. So a resignation or a removal of Elon could be detrimental to the company. So these are some of the competition or the risks that this company could face. Now, in summary, what I want to conclude is one of the statements that Tesla has is world cannot change CO2 emission by not addressing energy consumption and creation. Tesla is leading the way in energy consumption and production. So production in terms of cars, and then they do have a complementary business that is solar and energy storage, which is growing at a rapid pace. In conclusion, I think Tesla is a good risk-reward stock. Obviously, one big criteria to all investments is that This is a company technology that is evolving, and as an investor, one should analyze any significant changes. An example is Nikola Motors that came out is betting on hydrogen cell compared to lithium ion, how this will impact lithium ion batteries, and Tesla should be looked at, and any significant change in technology. But overall, if you look at the competitive edge that this company has and the increase in market share, they are at a very good position right now. That's all. If you like, please give me a thumbs up. Any comments are welcome. Thank you.